This is the morning brief from the Economic Times.
So, we have been told the two words cement and captivating in the same story just doesn't go hand in hand. Even if you throw in Holcim, the world's largest cement company, and its two listed arms in India, Ambuja Cements and ACC, in the mix. Okay? How about we tell you these companies have hit the headlines just last week, being at the center of a potentially $10 billion sale, the biggest our market has ever seen in this industry.
Reports are suggesting that Holcim Group may exit from India 17 years after it entered the country. Now, this puts the twin listed arms of Ambuja Cement as well as ACC up for sale. This also comes as a part of their global strategy to focus on only core markets.
And we have this for you in store today.
Obviously, it came as a shocker because you don't expect companies of this quality to be sold twice in your lifetime. You have the best growing demographic. You have the best company. Why would anybody want to sell? This deal has been in the making for last 2 years.
It all started, I believe, sometime last year.
They have been selling assets in Indonesia, Philippines.
They exited Brazil market, North Ireland, East Africa, Madagascar, the Russian markets.
If you see in the last 10 years, Holcim in India has been losing market share.
While it is a key market, the focus was never in India.
I'm expecting an intense bidding for a quality asset like this.
It will be one of the largest M&As in Indian market.
So which way will this story swing? Two of the most aggressive Indian businessmen, Sajjan Jindal and Gautam Adani, have already thrown their hats in the ring, we are told. Another might too. Can't this be an MNC buying out another? Considering the check size, what role will private equity players play? Will they be joining a team or have a go at it on their own? Capital is going to be the last thing on their minds. It's Friday, 22nd of April. From the Economic Times, I'm Kiran Somvanshi.
And I'm Arijit Barman. You are listening to Holcim, Cementing an Exit Strategy on the Morning Brief.
In this episode, we lean on a former Ambuja Cement insider and a cement sector specialist who has been analyzing this space every day for the past 13 years. We dissect the whys and the whats, the whens and the whos that are on everyone's minds these days. It is indeed a mind-boggling development, one that has raised the eyebrows of almost everyone we know of.
But Kiran, honestly, if one looks at their corporate history, when it comes to Ambuja, ACC, or even Holcim for that matter, being bold is anything but new. Ambuja was always ambitious and audacious.
You can say that for Ambuja, not so much for ACC. ACC was a typical bureaucratically run hierarchical company, but Ambuja definitely was very innovative, very creative, and very daring. Their logo itself is ICANN, so that is what they used to promote. And that's the spirit which actually led them to have the first cement company to have their own ships, jetties, first company to come out with split grinding unit, first company to promote fly ash as one of the mediums to reduce carbon footprint, one of the first companies to experiment with pet coke, agro waste. So Ambuja in its DNA had a lot of freedom, innovation, creativity, and that flowed from the top, meaning Mr. Saxeria and Mr. Neotia, who were running this company, allowed that kind of freedom for this creative expression to come out.
That's Rakesh Arora, one of the two voices you heard in the beginning. An Ambuja alumni having worked in the company way back in the 90s, and currently he is the managing partner of Go India Advisors.
I started my career in Ambuja in 1996, and it was one of the fantastic places to work because even as a new joinee who had just come out of the college, the amount of freedom given to employees to experiment was incomparable.
But even then, his initial reaction was shock and awe.
Having worked so closely with this fantastic company, obviously it came as a shocker because you don't expect companies of this quality to be sold twice in your lifetime. We were shocked out of our wits when it happened first, and to happen for the second time is something out of ordinary. So obviously there's a little bit of disbelief. When initially Ambuja was sold, we thought that that's a big mistake promoter is doing because it's a company, as I was saying, of a caliber which is difficult to find. And now with Holcim, which is like the world's largest cement company, trying to make an exit out of India, it looks, disbelievable. Uh, One, you have the best growing demographic country in the world, but multinational companies are known for being ruthless, unlike the Indian promoters who stick to their companies. So, after a brief shock, I think reality seeped in.
MNCs that manage a global portfolio often do a hard reality check, arranging the multiple pieces spanning across continents, reprioritizing geographies, or simply pivoting the businesses. We have seen that with global consumer companies like GSK or Heinz, haven't we? In Wholesome's case, it seems all the above factors have been at play.
Large companies like Ambuja and ACC, nothing can happen overnight. And so when we dug in to look at what Holcim has been talking about internationally, what strategy they want to follow, and also collaborate with what the local management was trying to do, it immediately fell in place that this deal has been in the making for last 2 years, and they have been taking small steps which we perceived that maybe the management strategy is changing, but it was directed towards a different cause, not what we thought it was directed towards. So Wholesome has in their presentations, etc., have already announced that by 2025 they want to reduce the exposure to cement and increase exposure to building solutions like adhesive, roofing, waterproofing for roofs, etc. Something which companies like Pidilite, etc. do. They want to increase their exposure, and they have been making acquisitions in developed markets toward these products. And to finance this, they have been selling assets in Indonesia, Philippines, recently in Brazil and Russia. So India was the remaining last block on the emerging market. Plus, I think having decided on the strategy to increase exposure to low carbon products, I think they could have sold what sells in the market. So Ambuja and ACC is the business which really can be sold into the market. So I think from Wholesome's point of view, they were pretty clear. And if you look at the latest few quarters of presentation, India figures just like one single line. So that shows you the importance they were giving to India business.
It all started, I believe, sometime last year. If you go through Holcim's website and their quarterly presentations from June of last year, they have started talking more aggressively on shifting their portfolio towards a greener product mix where margin profiles are also equally good. So they started off buying assets which produce green products, more sustainable products in the US and the Europe market. And in the last 12 months, they have made various acquisition, bolt on acquisitions, all concentrated in the US and European markets. In the same time, they have also been divesting cement assets. They exited North Ireland, which is obviously a much smaller market as a market, East Africa, Madagascar, and of late during the war, they have also talked about exiting their capital investments in the Russian markets. Recent chatter which started that India is also something which they're looking to exit.
That's Rajesh Ravi, Vice President, Institutional Equities Research from HDFC Securities. The analyst we had mentioned earlier who has been tracking cement for 13 years. But before we go ahead, let's step back and rewind to the very beginning and chart key milestones in the evolution of both ACC and Ambuja. First as competitors and then as co arms of a bigger global entity, Holcim, which, by the way, has gone through its own set of churn. So the history begins in 1985. Two enterprising gentlemen, friends and lovers of art and philanthropy, Narottam Sheksaria and Suresh Kumar Niotia, decided to take on the big boys of the Indian cement industry, ACC. So, they teamed up and started Ambuja Cements.
Ambuja was agile and nimble, as Rakesh said, and started growing through small acquisitions, like a DLF unit in Rajasthan. But ACC, the 100-plus-year-old giant, remained the grand old player.
Between 1999 and 2001, Ambuja bought into ACC as Tatas wanted to cash out of their 14.4% shareholding in the company.
But then, ill health of Ambuja's founders plus management bandwidth led to ACC stock to languish at the same 370 rupees a piece for almost 4 years.
And that's when Swiss giant Holcim came calling in 2005, taking a stake in Ambuja Cements and also buying 50.01% of ACC.
Within a year, Holcim went on to take control of Ambuja as well. The Swiss challenge was complete now.
Cut to 2013, Holcim does a major reorg in Ambuja and ACC to streamline their dual holdings in India. It was a controversial move. Several minority investors, including former Ambuja CFO Anil Singhvi, were up in arms for what they believed was a bad outcome for small or institutional shareholders. But eventually, in 2016, ACC became a subsidiary of Ambuja.
To further bring the two operations together, Ambuja and ACC then went on to sign a master supply agreement in 2018.
By then, already Holcim was planning to merge both Ambuja and ACC into one composite entity to simplify life.
But from 2017, when they first set up committees in both ACC and Ambuja, Holcim never really got around to merging the two due to a variety of reasons, ranging from involving difficulties in transferring ACC's mining leases, unfriendly tax regimes, to just being slow.
So, what does that mean in terms of the current ownership? Holcim directly owns 63% of Ambuja. In turn, Ambuja Cement owns 50.05% of ACC. And for some odd reason, Holcim also owns another 4.48% in Ambuja directly. Very complicated, right? Both Kiran and me have been scratching our heads for a long time.
Now most of it is behind us, and a market was expecting a merger announcement this year. This news has come through now, so obviously merger would take a back seat for now.
But frankly, in retrospect, there were enough signs that something big was indeed brewing.
Coming to the Indian management, there were subtle signs. Suddenly, after a few years of holding into Ambuja, they started doing their annual conference calls for analysts, which started in Q4 of 2020. So that was the first sign that they were interested in improving their market cap. Number two is that they announced aggressive expansion plans, which was out of ordinary because normally any capex plan in Holcim takes a long process. Number three is that they also aggressively bid for limestone assets in auctions at a price which we thought which was a little bit outrageous. Meaning even the competition was amazed that Holcim would bid so aggressively. So clearly, they were building a portfolio of brownfield and greenfield expansion so that they can sell the narrative to a new buyer of 100 million ton, and that is the narrative they started speaking about in the market. So from currently, they both are around 67, 68 million ton. They said that by 2025 to 2030 they would be 100 million ton, and XYZ are the plants which they are pursuing. So if you see in the last 10 years, Holcim in India has been losing market share because they were not growing enough, and competition like Ultratech, Shri, Dalmia were gaining market share. So clearly, they were becoming more focused on market cap gains, and they were engaging with the community and pushing a narrative which could have helped achieve this market cap gain story out in the market.
So, if you look into this February end presentation which Holcim has uploaded, one chart which clearly shows their intention that cement, which is 60% of the consolidated revenue in CY20, they are looking to scale it down to close to 30-35% of the revenue, and this is to accommodate the solutions and sustainable product, which was 8% in CY20, 13% in CY21, and they are looking to scale it up to 30% by 2025. So the intent is clear: sell off assets in various markets, use that cash to reinvest into greener solutions. And this is what India fits that bill apparently, because though India is a good cash flow market for Holcim, they are finding it that at one go, if they sell off the Indian assets, a good chunk of their target would be achieved at a faster pace rather than selling small assets across multiple geographies.
Pivoting from a commodity play to offering solutions and services or branching out to construction chemicals makes strategic sense for Holcim, as globally, players like Sika enjoy far higher P multiples than just a cement company. In this case, Sika trades 4x that of Holcim globally. And if we take our very own Pidilite, the difference becomes 8x.
Construction chemicals are they don't have that kind of logistic costs which are associated with bulk commodities like cement. So cement can't travel too far, but construction chemical can. So you can export to a lot of other places like Europe, etc. Cement you can export only to neighboring countries, because if the travel time is more than 1 month, the cement gets spoiled. So that is another reason why construction chemical tends to be getting higher valuation, because they can be exported.
So now perhaps we can guess what is going on inside the head of Holcim's CEO. Remember, as a group, it has also gone through a mega global merger with Lafarge, a move that forced the combination to strip several of its assets across the world, including India. But despite all that, what is left of Holcim in India is hardly inconsequential.
If I look at from an Asia Pacific market, India is the largest market in Asia Pacific. 60% of the Asia Pac revenue is derived from India market. So India is a key market. And even if I look from an EBITDA level, or at EBITDA level, 12% of the total EBITDA for the group is coming in from India, whereas 46% of the Asia Pac EBITDA is generated in India. Okay, however, they have not been able to grow in this market for last 12 to 13 years, because while it is a key market, the focus was never in India. This was till, you can say, 2018 or 19. Thereafter, when they brought in a new CEO in India, Neeraj Akhoury, he has been driving changes within both the companies, ACC and Ambuja. And of late, the missing link which these companies suffered, growth prospects, that has been taken care of to a greater extent. At least the communication and intent has been set right. grow and from a long haul. That was the communication which has been sounded off for the last 2 years. And both ACC and Ambuja have executed capex also and are broadly guiding that how they want to grow in next 5 to 10 years. So that has led to even valuation improve for both the companies. Now, coming to comparing its Indian operations versus how the global Holcim overall, around 21% of the total revenue came in from India. However, cement EBITDA for the group, India contribution is just 15%.
Even then, we are looking at a potential $7 billion deal, which could easily go all the way up to $10 billion, depending on things like open offer, etc. Bottom line, it's a keen contest for the brave hearts with deep pockets.
It will be one of the largest M&As in Indian market. Given that it's not just about bringing in money, okay, cement is not just this is not just an equity investment. This is actually running these factories. And given that Ultratech and Sri will find challenges in getting past CCI. Now, why I say this? You remember 4 or 5 years back when Lafarge Holcim merger had to happen. CCI forced Holcim to sell off Lafarge assets in the East market, which was finally acquired by Nirma, which is now the Nuvoco. So, if these two players have to participate, obviously very difficult for them to get hold of these assets. Two names which is prominently displaying are JSW and Adani Cement. Adani Cement, we hear they have been trying to launch cement from the Gujarat factory. Even when we talk about JSW Cement so far is largely present in India through grinding stations. Okay, so this will any Indian promoter taking over will lead to a lot of changes in terms of the team structure.
But then, Rakesh believes financing won't be a problem with private equity players around. After all, this is a transformational deal in the making.
There are enough business houses who are hungry to take a foothold into a very lucrative Indian cement industry, and this is a once in a lifetime kind of chance for them. So the noises that you're hearing in media about Adani or JSW, all make sense. Meaning, it will take more than a lifetime to build this kind of business. To pay a little bit of premium to get into it makes sense, and there would be an opportunity to grow this portfolio from 66 million ton to 100 million ton, which Holcim has been preparing ground for. And a lot of this is brownfield, and which will be very low cost, meaning $80 per ton, not the $200 I'm expecting for Ambuja.
Names of Carlyle, Apollo Global, which is an existing investor in JSW Cement, are already doing the rounds. These are blue-blooded firms with enough and more dry powder. So $2 to $3 billion funding should not be an issue. Also, JSW had teamed up with Bain Capital and CVC Capital before, in 2016, when it almost made it to the final rounds to buy Lafarge's cement unit in eastern India that were getting sold to comply with competition norms, but eventually lost out to Nuvoco Cement from the house of Nirma. So what we're trying to say is even JSW hasn't hesitated to partner with PE firms if need be. Same for Adani, who have raised money from private capital pools from UAE recently, though not for the cement business. And finally, it would be interesting to see if the global players also jump right in.
After Holcim and Lafarge merger, what we are left with is only few multinationals. But the biggest space in cement has been occupied by Chinese companies. So I don't expect Chinese companies to be able to get into Ambuja and ACC. And the domestic names we mentioned are far more aggressive because they understand what they can do with these assets. See, large multinational companies, whoever has come to India, have not been able to grow at all. They've been growing at a very tepid pace. So, for someone to acquire these assets, they have to take the capacity at least 50% up within the next 5 6 years to be able to bring down the cost of acquisition. So, large multinationals don't really stand a chance. I think it's going to be very aggressive Indian business houses who will be able to do it.
When something as big as this happens, it would have much larger implications than just a pure play merger and acquisition. The teams inside ACC and Ambuja would be on tenterhooks, not knowing how this story will pan out. So who knows, maybe this is the right time to cherry pick talent from these two powerhouses. Secondly, in the interim, additional capital expenditure will slow down, meaning less capacity addition, meaning better pricing power for the incumbent cement companies, who in any case are often accused of price collusion. From a price discipline point of view, if one large player goes out and a new large player comes in, it doesn't change much. But what it does is it changes the dynamics for other market leaders, for Ultratech, or even a Shree, or even a Dalmia Bharat, who have seen easy grow at the expense of ACC and Ambuja. So indeed, it's game on in this developing story. You have been listening to Cementing an Exit Strategy on the Morning Brief with me, Arijit Barman.
And me, Kiran Somvanshi.
Thank you, Rakesh and Rajesh. Deeply appreciate. This episode was produced by Surbhi Modi and Indranil Bhattacharya from ET and Swati Joshi from Awaz. Soundarya Jayachandran was the sound editor from Awaz. We hope you liked this episode. Do share on your social media networks. The Morning Brief drops every Tuesdays, Thursdays, and Fridays. Thank you, goodbye, and good luck. All clips used in this episode belong to their respective owners. Credits mentioned in description.